Hey guys, so welcome back. A couple weeks ago I had made my Strongblock deep dive, and in that video I had asked if you guys would like for me to cover the AMAs that David Moss does on Saturdays, and you guys said yes. So we are going to cover November 6, 2021's AMA with David Moss. He heads into the Telegram group on Saturday mornings and just answers questions, spends a lot of time doing that. So I'm not going to necessarily go over every single question, but there are some questions that I think are very interesting and require some extra clarifications. Without further ado, let's get into it. The first place you want to go to find the summary of the AMAs is to follow a gentleman named Bacon ESQ on Twitter. And how could you hate a name like that, right? And he posts these usually the same day, pretty quickly actually. Strong will typically reshare them as well. Now, what I like to do, so you can look at question by question. Things can get a little weird and lost in Twitter, so what I like to do is come to the very bottom and click the thread reader app. Usually you'll see this somewhere toward the bottom. And then you can get it all kind of clean on one website. It just makes it a little bit easier to read. All right, so the first question here, let's zoom in just a little bit. That was asked is, in the service to contract, you said it will have rerouting without claiming. But will there be a function to auto make nodes at every 10 strong earned? Now that would be cool. I would argue that you would not want to do that because the gas fees are going to kill you. What he's talking about is in the service to contract that Strongblock is working on, they're going to change the claiming feature to reroute your strong that is sitting waiting to be claimed, but instead just create another node. Because typically what a lot of people do is they'll wait till they have 10, they'll claim it, that's one transaction, and then they have to then send it back to build another node, 2 transactions. So because the gas fees are a little ridiculous, right, on Ethereum, they're working on the ability to reroute your strong to essentially take the reward that you have and just put it back in without having to actually claim it first. So that's what he's referring to here. So he's wondering, is there a way to auto do this every time you have 10? I would argue that's okay, but there will come a point where, the only way this would really work, no, you would have to be claiming from all your nodes. So that would be expensive, okay? But it's an interesting thought. He said the claim routing feature will work just like the current claim to strong pool or your wallet feature. It'll simply allow you to stake into other pools, but there will be more pools to choose from. The big addition here is you have enough strong when you claim to create a particular node, then you'll be able to create a node instead of claiming into your wallet. So no, it's going to be a manual sort of process. And as a matter of fact, from what I recall in the former AMAs prior to this, there was some discussion about also routing your strong to donate to charity and also using part of your strong rewards to purchase merchandise on a store that they are working on. So pretty cool. Okay, so the next question, which probably got most of the attention in this AMA, was this. What is the exact amount of Fantom and Matic one-time grant? David Moss says that Polygon has so far committed $15,000 of Matic in their one-time grant. Fantom has discussed a higher amount, but we don't have the exact amount. Polygon will be first. Then he goes into kind of the idea of how this works. I'll just read it briefly. He says, that brings up the question of why don't blockchains support their full nodes? The reason Strongblock exists, indeed, our mission, is because blockchains as a whole tend to only reward validators and block producers, and for most chains, becoming a validator is not only expensive, it's often millions of dollars in their native token. It's also a situation usually of who you know. So he kind of goes into the congestion of queries being relieved and different things that the nodes provide. Okay, typically paid out in native rewards. Instead, they want the nodes to work for free rather than pay it. Okay. which is interesting here. He says, so we offer rewards, being Strongblock, which means we need to generate them from deploying the treasury. That's an interesting use there, and supplementing that with grants. But that's something we've heavily invested in with time and soon with capital. Okay, there's a lot to break down there. A lot of people were very upset when they read, oh, it's only $15,000. I don't really see that as being all that new, personally. I believe that information was out there already. But let me maybe kind of share with you the way I see this, which is that if you're Polygon and you're approached by a company named Strongblock and they're saying, yeah, we can, decentralize your blockchain infrastructure and beef up your architecture and make it, do all this kinds of stuff, that's great. Okay, you have a proof of concept. Remember in my Strongblock video, I said Strong is essentially a proof of concept at the moment. Okay, doesn't mean it doesn't do anything. It just means that you have to have the proof of concept proven before you can have a sit down with these bigger companies and be taken seriously. Okay, so they're being approached by Strongblock, who has a proof of concept. Okay, so they've proven that this model works. They're saying this is what we can do. We can bolster your infrastructure, beef up, your security and the nodes, and incentivize people to build these and kind of make this whole thing work. And so Polygon is saying, okay, tell you what, we'll give you a one-time grant, see how it works, and we'll go from there. I mean, I'm not saying that's exactly how they worded it, but I'm saying if I was Polygon, that's exactly how I would word it. Not exactly, but the point being that, hey, okay, I see what you're promising here. It's helpful. Here's a small amount. Let's see what you can do. If it works out, we want more, we'll give you a bigger amount. It makes sense to me. It's good business, right? You're not going to give away the farm just because you're approached by a company named Strongblock, even if they have the proof of concept. So the 15K doesn't bother me. I think that bothered a lot of people. I don't know what people were looking for. I mean, did you expect them to give $1 million grant or something? I don't know. But 15,000, yeah, that's not a ton, but this is going to go through a pilot first before it's rolled out. Pilot meaning if you own an NFT, it's not going to be open just for anybody to make a Matic node initially until it's proven. So, but then he mentions, and has been mentioning actually, a treasury. And that's interesting because once some of us in the community were bringing up Olympus and OHM and the treasury, all of a sudden they were talking about treasury, which I thought was interesting. So the idea is to pay people via a treasury system and supplement that with the grants. Okay, just be another layer. By the way, if you're concerned about the sustainability, while that is a valid concern, you can go and look at the inflows and outflows of the rewards pool and you can see how healthy it is. So, and this is now what, months after supposedly there was going to be a halvening to keep it healthy, and it's actually been healthy even without it and with explosive growth. But I don't, really what he's getting into here with his answer is he's trying to state what their mission is, that essentially these blockchains don't want to reward their node operators. That's kind of the gist of what's going on, hence the low amount. But I think if I was to add to that, I would say, if I was Polygon, I'd say, okay, we'll give you a small amount, prove it, and then maybe we'll give you more. I'm not going to give away the farm for something, right? Because if they could do it, they would have, if they had all this money to reward people, I would imagine they'd create some sort of program. Of course, it's much easier to just have somebody else do it, much easier. Then you can focus really on what your main mission is. And, Polygon's not really rewarding node operators as part of their main mission. So there you go. Can we add option to pay 30, 60, or 90 days so we save on these crazy gas fees? So what this person's asking is, hey, rather than paying 30 days, one transaction, paying 30 days again, another transaction, paying 30 days again, a third transaction, can we do one transaction, just get 90 days? Makes sense to me. He kind of answers the question. He says, with Ethereum Altair, I think is how it said, update a few weeks ago, and SHIB and all these other NFT activities is making Ethereum just go a little nuts. This happens. The Ethereum gas goes up, it goes down, it goes sideways, and I once asked people, I said on Twitter, I said, hey, what excites you more? The price of your Ethereum, like your ERC20 token going up, or the gas fees going down? And bar none, everybody said the gas fees going down gets them more excited. It's pretty funny. So anyway, so he says the protocol gets crushed by high gas fees as well. The simple answer is in the Service 1 contract, there's no way to consolidate paying for fees. That's Service 1 contract is what you currently have. That's something that, while not yet in Service 2, is now a possibility. So sounds like something that they're going to work on, and I think that would help a lot. I think anything that you can do to reduce the transaction, as long as you're going to stick on ERC20, anything you can do to reduce the transactions is going to be a big benefit to not just the people who are supporting the protocol, but the protocol itself. So here's a biggie right here. The topic of sustainability is always coming up, and it's probably the number one thing. Actually, it is the number one thing he said he's working on, which I understand. So the question is, are the ideas you've been brainstorming with the Swiss Economist still up to date, or have you moved on from that? If you have moved on from them, why? Thanks. And let me read his response first, and I'll give you some thoughts. He says, David Moss, we have several amazing advisors. Our Swiss-based advisor typically focuses on economics. He also tends toward being an Ethereum maximalist. That does not mean the main ETH 1.0 or 2.0 chain is the only solution. His idea of a gradual decay in a rewards contract, which still gives a great return, is incorporated into the Service 2 contract. So it's already in there. Okay. We've implemented it and tested it and added a number of parameters to tweak. The result will be that we shouldn't ever have to introduce any quick declines in rewards. Fair and lucrative for everyone. So people are a little upset by this, but I will have you guys know most node reward programs do decay over time. Okay. Just so you know, I mean, that's typical. That's very typical. You look at Gala and you look at many others, having rewards go down over time, governance, which will eventually take place here, governance. But all of this is not unusual. What is unusual is keeping the rewards high for a long time. I would say we are in that long time. I would consider to be a long time period right now with Strong. I had an idea that I'm going to try to get to David Moss on this. This is just a thought that I had, I don't know, a couple weeks ago. And when we're talking about a gradual decay in a rewards contract, I think something that would be interesting is to delay the decay, it's a tongue twister, delay the decay of the rewards by incorporating some Strong that you can sort of, either Strong or some sort of NFT that you can stake to your node that kind of slows down the decay. Or if the decay is taking place, you can almost you can't see me, but I'm doing an air quote, kind of replenish the node, if you will, to kind of bring it back up. So then it kind of resets the decay, if you will. Okay. The reason I like that idea, and it's not his, it's mine, and I'll try to see if I can get it to him. The reason I like it is because whether it's you taking Strong and staking it to your node to reset the decay, or they have a new set of NFTs that can do this, those new set of NFTs would require Strong. And what that does, in my mind, is that allows the existing nodes to also have an inflow of Strong, not just new nodes. So currently you need at the moment, you need new nodes to be built for inflows. But what if you can get inflows on the existing nodes? That would be a big deal to me. So hopefully I can get that idea to him. I don't know, maybe you guys think it's stupid, and if you do, that's great. Okay, just an idea that, hey, take your Strong and just restake it, or have some sort of NFT you can buy with your Strong to stake it that kind of resets the decay back again. And you can just keep doing that, an unlimited amount of time. So there's constantly an inflow coming in on the existing nodes. So that was my idea. Maybe we'll see if we can get it to him somehow. Okay, so here's an interesting question. Well, The answer is a little more interesting in the question, but okay. It says, is there any plans to have a REST API to retrieve node data so developers can build a native app instead of using the browser's DApp to track their nodes and possibly even claim things in the future and any other relevant features? Okay, so there's an answer in here that's a little more interesting. It says, thanks for the question, Kay. This is David Moss. With the introduction of the Service 2 contract, we will be able to isolate and secure access to node data. That's the reason all of our APIs are protected behind multiple layers of security. And here's the interesting part. We're looking forward to providing the ability for people to create their own native apps. That's interesting. And of course, that leads into the discussion of why it's highly likely there will be a StrongChain in 2022. That would allow for an ecosystem to support decentralized democracy to strengthen both a strong chain and other blockchains, and allowing the ability for everyone to participate in validation, block production, and building a thriving third-party open source set of applications around it. There's quite a lot to pick apart with that. I'll back up for just a second. What a lot of people may not know is, I don't want to get into the question, but the question is, well, how does Strongblock make money? Well, they do consulting, but before they had nodes as a service, they had blockchains as a service. Okay, so it was sort of the same kind of concept as the nodes, where you can build a node without technical expertise and it was up and running pretty quickly. But they applied that to blockchain, so they were able to spin up a blockchain in like a few minutes. Okay, so that was a service that they previously had. That was before COVID and all that. But nonetheless, the reason I'm bringing that up is because now we're talking about StrongChain in 2022 and decentralized democracy. Okay, that sounds like a lot of governance. Decentralized governance, I think it's a fancy term for governance. He might be thinking of something in there that I'm not thinking of at the moment. To strengthen StrongChain, okay, and other blockchains, so that people can participate in validation and block production. So I'll just have to kind of tell you how I read this. I read this as, hey, we're going to build our own blockchain, which they already have expertise in doing because of the blockchain as a service that they used to have. So they're going to build their own blockchain, I'm assuming, moving the strong ecosystem to that blockchain that will solve the gas problem. But when I see strengthening other blockchains, I start to think, okay, so some way, somehow, Strong will probably at some point be multi-chain. So it will be cross-chain so that nodes can be built on other blockchains, even though you're really participating on StrongChain. Okay, don't know if that makes sense. You have a lot of blockchains that operate on multi-chains. That's not unusual. So that's kind of where I see Strong going. And quite frankly, StrongChain, they kind of have an opportunity here to maybe perhaps fix a lot of the tokenomics. I know a lot of the supply was burned. I mean, they burnt a lot, and I don't know if they burnt the right amount. Okay, maybe they should have did less than that. Just kind of give them the ability to, I don't want to say start all over, but kind of take the system and just move it over, and probably participate in a multi-chain sort of experience with the node system. Okay, where you have a centralized place to sort of pull all the API and all of the data that he was talking about into StrongChain, but you're also running nodes to support other blockchains as well. And it sounds like the governance will be playing a big role in that. I think it's actually really cool. They're going to allow open source application development from third parties on StrongChain. Sounds very fascinating to me. And that's all coming next year, supposedly. So we'll see how that works. All right, so another question about the reward rate. Can you give us an indication of what the floor rate will be for the oldest nodes? Will it be more than half or infinitely go down in percentage decrease? And David replies, the decay rate would have a delay for older nodes before it goes into effect. For newer nodes, they would even likely start off slightly higher than the current reward model, then decay gradually over the typical payback time with the same base effect. It's after that the rewards will start to decay. We'll have more details about it when we launch in a few weeks. And again, this is tweakable for each new node protocol that will be launched. It will start with Polygon. So there's no conversation about decaying the existing nodes, okay, even in the new contract. It's not necessarily explicitly said. It could be, but it's not said. So, you know, I kind of see these pilots, and I use the word pilots because the people who have NFTs in the community are going to be able to launch some of these newer nodes like Fantom and Polygon and things like that first. And I believe that's when they're going to be able to test a lot of this stuff out so that it's not released on a broad scale. It's released to a smaller community to gauge feedback. And I think that's a very smart way of doing this because you're already sort of launching those nodes in a smaller test group before you launch them publicly. So you may as well test out also the new Decay model and different things like that before you launch it publicly as well. So I don't see any issue with that. But so it sounds like the older nodes, the decay rate would have a delay for the older nodes. Okay, so he could be talking about the overall strong nodes, or he could be talking about the first, you know, say Matic nodes as opposed to the last Matic node, as an example. Not sure. For newer nodes, they would likely start off slightly higher. So, you know, let's just say you're making 0.1. Maybe it would start off at 0.15, but at the end of the day, they kind of delay at the same base rate. Is kind of what I'm, same basic effect. It's kind of what I'm reading into this. So that's interesting. Not sure why they would want to delay the older ones and start the newer ones higher. Interest. I don't really have any thoughts on that, but I just think this is a good way to test things out, especially if you're going to tweak it for each node protocol. You know, you can sort of, in Olympus, I'll just go back to Olympus for a minute. When you go to Bond, you'll notice some assets give a higher discount than others. Why is that? The reason for that is because they might need certain assets at a certain time more than others. So they're trying to incentivize people to give them something, you know, a certain asset more than a different asset, because that's just what they need in the treasury at that moment. Well, they can kind of, Strongblock can sort of mimic that with the nodes if they are tweaking the node protocol reward system based on maybe what is needed. So if there's a point in time where they need more Fantom nodes, perhaps they can make the decay slower, you know, so on and so forth. So it kind of, you kind of corral people to go in a certain direction, if you will. Okay, so another question here is, Hydra is releasing an ETH bridge in the near future. Full EVM compatibility, bridge will be one click to ERC20 to HRC20. It just requires a browser extension. Is this something that Strong could be migrated over to avoid the high gas fees? David Moss says, we have looked at migrating to other chains to reduce gas. We're coming to the conclusion that there are too many liquidity, adoption, community, migration, compatibility, and other challenges to forklift our rewards model. I like that word, forklift. It's very visual. That's why we are actively modeling a new chain. So there you go. Again, he's mentioning new chain. It sounds like it's like, hey, let's just build the solution rather than trying to find the solution, right? So that sounds like that's the approach they're trying to take here. Solves the gas fees. It allows them to, like he says, quote unquote, forklift their entire system over to a chain if they are building the chain themselves, right? And again, any updates on sustainability model? I understand the reason for it. It's just, I mean, you know, look, as I do these AMAs, this is a question you're going to see every week, sometimes several times in the same AMA, okay? But it's kind of good to, in a way, to ask the question, because as you're asking it over and over again, he might reveal something a little bit different each time. He says, see above and over the more recent AMAs, regarding the Decay rewards model, deploying capital and using the rewards to supplement, and a StrongChain. And also maybe another token. Just throw that in there, by the way. Big discussions with a top exchange and other partners going on about that starting next week. So deploying capital. They still have a lot of capital from the NFTs, just so you know. Not sure how that has been deployed yet. Something to keep in mind. You go look at how many NFTs were sold and at what price, and I think they got quite a war chest there. And then you have the Decay and the rewards model, obviously using the rewards to supplement, and a StrongChain, maybe another token. Well, if you have your own blockchain, that certainly makes it easier to just introduce another token, right? And you know, something that was maybe went over a few folks' heads. This was something that was mentioned a few weeks back, where he started talking about node pools being able to pay out the rewards. And I don't know how many people really caught on to that, and sort of be something like where you would have a pool, or blockchain, or sorry, Strongblock would have a pool of various other nodes. You know, just think of 5 or 6 or 10 of them in your head, right? Those are all paying out the rewards to Strongblock. Strongblock takes all that, puts it into a pool, and says, okay, send your Strong into this pool, and you'll get a percentage, however much you send of your Strong, you'll get a percentage of these rewards from the pool. And those are either sold off and are paid out in a native token, or can be paid out in those actual nodes' own tokens. So that would be another way of taking your Strong and inflowing it back into the rewards pool, because you're taking, instead of building a node, you're actually taking it, sending it to them, and then you will get paid back in various other nodes protocols. That's kind of a cool idea, and I think that could, I think really what's going to happen, me personally, in my gut, is there's going to be multiple options. It's not going to be one thing. It's not going to be just another token. It's not going to be just a Decay model. It's not going to be just a node pool model. It's not going to be just a treasury. It's going to be all of that and then some. I think they're attacking it from multiple different angles. And that's smart, because if you have multiple different options for paying out those rewards, you're not putting yourself in any position where one of them fails and you're kind of screwed, right? You have all of these, you know, methods, I'll just say, of paying out your node operators. So, you know, one fails, you just have another one while you fix the one that failed, and so on. It doesn't put the protocol or those who are invested in the protocol at jeopardy. So that's sort of how I see this playing out. All right. So somebody asked a question: if you could have this community focus on 2 things that would further the mission you have for Strongblock, what would they be? Great question. David says, number 1, look for new ways for Strongblock to grow and thrive. Number 2, don't pay attention to FUD. 80-20 rule, once again. Hate to say it, but 80% of people focus on number 2. Not that they don't, I'm actually saying they pay attention to FUD, is what I'm trying to say. And 20%, probably, if even less, are actually looking for ways for Strongblock to grow and thrive. Yes, that's Strongblock's responsibility, not ours, but there's no reason we can't help them. And spreading and pay attention to lies and things that are just straight up not true because you haven't done any research doesn't help anybody, okay? You know, if you have a legitimate thought or complaint about something, that's one thing. When you have an illegitimate thought or complaint about it, that's just nonsense. So I like that answer. This is interesting. Will or has Strongblock looked into bringing nodes as a service to blockchains that are ISO 20022 compliant? And the answer is yes. So XRP, XLM, Algorand, XDC, IOTA, and many others. That's interesting. I would love to be able to operate nodes on those. And with the use case that those will have, when that kicks in is another conversation, but the use case that those have, that could be huge down the road for sure. You just get one of those blockchains, that could be huge. I mean, could you imagine running nodes via Strongblock on, say, XDC or XRP, something like that? What currently is your largest single bottleneck impacting the pace of development for Strongblock? So he says the mythical man month. Bringing on new people means they need to learn from the current people. That has happened in project development since the dawn of software, but we are very carefully growing our team of contractors. Big addition next week. That's interesting. I'm not sure what the big addition. I think they're hiring a lot more people over time, and I would venture, I don't go and keep an eye on the LinkedIn page, but I would venture if you went and kept an eye on the LinkedIn page for Strongblock, you'd probably see those new people. Okay, so let's get in quickly to all these points here he talks about. Can you publish an updated roadmap? All right. Things change as the market and technology change. What I can tell you for now, as we've been discussing, is through the end of 2021. Okay, so basically, 50 days left. Number one, ETH 2.0 smart contract audit with Hacken starts Monday, so they're already into that now. Expected to go live during the week of the 15th. We want that. We want more audits, especially from Hacken. Go look up Hacken, who they are. Service 2 smart contract audit starts next week. That's great. And will take longer. It's much bigger and more complex. We'll go live after ETH 2.0. Okay. So sounds like at that point they'll launch Matic. Fantom will go live after that. More pools and node partnerships will be announced. This is 2021. This is not next year. This is in the next 50 days. Okay. Yes, they don't always hit their timelines. I mean, I don't think us personally always ever hit our personally promised timelines perfectly. So that's something we could bear in mind, of course. Then he talks about the Strongblock merchandise store will go live next week. So that's this week. We'll go live next week while we wait for the results of the ETH 2.0 contract audits. They're working with 3 auditors. They can only announce Hacken at the moment. And they'll announce others after they sign contracts next week. So that's all in 2021. So they've got audits, launching Matic, launching Fantom, more pools and node partnerships being announced, the merchandise store, and other auditors they're working with. Now, one thing he didn't mention in here, let me go up and see if I can find this. We just went over it. Yeah, I'm not finding it at the moment. He did earlier talk about how there would be an announcement of a new exchange, top exchange. I'm not finding it, of course, but anyway, he did announce that. So I would imagine that's coming too, even though he didn't mention it. He did say partnerships. So, I'm sure as you guys are watching this, you're saying, hey, it's right there, it's right there. So anyway, there it is, right here. Big discussions with a top exchange and other partners going on. So he didn't say he was going to announce it, but I would venture they would. You will find, and I will submit to you, that many good and positive news stories tend to come out in a bull run. Okay? That doesn't mean that the news is always good news, but it's perceived as good news, right? Just like the Bitcoin futures was perceived as good news in 2017, although it crushed the market. No one knew that, but it was perceived as good news, right? So you'll typically find these news stories will come out in a bull market, and I don't think that's by mistake. So this is all in 2021. Very exciting. All right, so speaking of a large exchange, any news on Strong tokens to be on Binance? If you remember, I had posted that there was a sitemap in Binance that showed Strong. Whether that means it's going to be listed or not is it's up for debate, but did wonder why it was in there. I mean, why would you have something in the sitemap that's not listed on the site? It says we're in discussions but can't make announcements. Okay. And he kind of dodges it after that. So that pretty much gives you your answer there. Okay. And can you confirm that if you fractionalize nodes, they will be on other blockchains or even on our own blockchain? The idea sounds awesome and helps with inclusion and growth. What you described sounds complicated. With nodes, it will likely be a light version where you have more nodes with lower contribution cost. With validators, the fractionalization will be as if you had more nodes. Same approach with ETH 2.0 pool. Keep mentioning that. Each contribution is treated as a separate transaction. We'll have claim all. Yeah, talking about fractionalizing nodes on other blockchains and on a whole new blockchain. I get where he's coming from, but yeah, you're likely going to have kind of a lighter version of that where you're going to have more nodes with just a lower overall contribution cost behind them, right? That's kind of how I've pictured it as well. What I said earlier about in my opinion, various approaches they'll take to the sustainability, they're going to attack it from all angles. That's kind of how the best way I can describe it. He adds even something else into the mix that, I even forgot to include. The question is this: as Ethereum is the quote cash in our wallet, it's the one to always depreciate. Would it be possible for people to claim node rewards in other tokens, such as ETH, instead of Strong? This way, more Strong is left in the protocol. This would help with the scarcity issue for the Strong. That's interesting. Let me read his response and I'll give you my answer. He says, yes, at first they will only be ERC20 compatible for the first release of the Service 2 contract. But over time, we'll be adding non-ERC20 tokens for rewards as well. That's interesting. The wallets are much better at allowing you to switch between chains now. It's still a bit complex for users, but we have a team member working on that as well. Okay. Okay. So first of all, I'm thinking about how something like this would work. So you'd be claiming something other than Strong, but it would be in the same dollar value. So if you had $1,000 worth of Strong, you can say, oh, I'll take the $1,000 in Ethereum instead, or $1,000 in whatever, USDC, or he even said non-ERC20 tokens. So that's interesting too. So I'm trying to think how exactly that, because you got to remember, like they would have to go out and purchase that other coin and have it readily available. So I don't know, maybe somebody who understands the economics behind this can tell me better than I can currently understand it. But I'm thinking, okay, if you currently pay out Strong because that's what you're receiving, but now you pay out, say, Ethereum, I mean, you have to go out and purchase Ethereum. So what are you selling? You'd be selling Strong, would you not? Which would cause selling pressure. So I don't, unless there's some other way to do it that I'm not thinking of. If there's some other way to do it, then I'm completely missing that. But let me know in the comments. Maybe there's something I'm forgetting or not thinking of. But non-ERC, so this is very interesting. So paying you out in other tokens, if there's a way to get those tokens that I'm not thinking of and you can keep your Strong and don't have to sell off your Strong and it stays in the pool, I mean, that's a great idea. That's a fantastic idea. Just not sure how you'd acquire those tokens, like USDC or Ethereum or something else, especially non-ERC20 ones. The wallets are much better allowing you to switch between chains now. I think he's referring to like MetaMask and Trust Wallet and some of those other ones. We have a team member working on that as well. So I'm not sure, maybe some ability to one-click add. Because, some protocols, if you go on their website and they're on, like, say, Avalanche, but you don't have Avalanche in your MetaMask, yes, sometimes you can do a one-click and it will add it in. I don't know if he's referring to maybe something else. Will the Strongblock merchandise store contribute to node rewards in any way? And he says all profits from the merchandise store will go to charity, not rewards. And of course, people are saying, does the decaying model drop rewards to 0 over time? No, it just keeps decaying asymptotically. I can't even say the word. My bad. Yeah, I can't say the word. But there's going to have to be a floor to that. There has to be some sort of floor. It's not going to decay to 0. Otherwise, what's the point? Like, why would you pay your monthly fees if you were making nothing? I mean, you're not in this for your health. You're in this to make money, right? So, how many Polygon nodes will be available at early access launch, and will we be able to compound them? Only everybody that has a metal NFT will have access, and regarding the compounding, this is part of routing, claiming to create another node and send in your wallet. So he didn't directly say. I think the question, and I understand the question, we were not able to theoretically compound our Sentinel nodes. Now, we weren't getting paid out in their native token, so that is a big reason behind that. But I think people are wondering, like, are we going to be able to create, claim our Matic or whatever and put it back in and make another one, or is it just like a one-time thing? Maybe would have been a better way of wording that. And of course, for the very last question, what happens when grant tokens run out on new protocols like Matic while the nodes remain online? Do grant tokens have any relationship to the projects you are pursuing, since nodes in theory will work with or without grant tokens? It's kind of the same question written a third or fourth different way. And he says, as I said earlier, grants are a small part of how we be funding rewards. So again, a treasury, a pool system, a decaying system, a blockchain system, another token, grants, all sorts of various ways to attack this problem. I would, again, I'm just going to reiterate, see some sort of option to reset the decaying model by adding more strong to each node. I think that would just add a whole nother inflow on the current nodes, because there is no inflow on current nodes. The only way to really get inflow, if you want to call it that, is to go purchase an NFT. I mean, that's really the only way other than building nodes. So having some ability to bring strong in on existing nodes, I mean, you got 140,000 nodes. You know, that's strong coming in, not just on new nodes, but now on current ones as well. So hopefully they can do that. But, you know, a lot of questions about how to sustain it, how to sustain it, how to sustain it. And I do have confidence that they will fix that. And quite frankly, the rewards pool has been, as far as I've seen it, since I've gotten the Strongblock, been very healthy. So it has been very healthy. So yes, it needs to be fixed, but we're not like in the fourth quarter here, I guess is kind of what I'm saying. So it sounds like we got a lot of interesting things. A new StrongChain coming 2022 with the ability to have the decentralized democracy on there, support other blockchains. It sounds like more partnerships going to be announced this year with the merchandise store, Service 2 contracts, Matic nodes, Fantom nodes, and various audits taking place as well. And that's just before the end of this year. So I hope you guys found some interest, some interesting things in this AMA. You know, I'll do these probably every week if I can. I don't know if I'll get to every single one of them, but I just think that there's some points in these that are worth highlighting, right? And I think as you're reading this, sometimes you glance over something and it's like, okay, but you don't really, unless someone is kind of explaining it, or at least just adding some color to it, sometimes you can just glance over something and you're not sure what you just read. So I hope I provide some clarity and some color to that. Let me know what you think in the comments. Thanks for tuning in. God bless and take care.